Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Good afternoon and good evening. Welcome to Traders Workshop for Tuesday, February 20th. I'm your host, Tom Schneider, CMT with NinjaTrader. And a Traders Workshop, we like to bring in our NinjaTrader ecosystem partners, vendors they might be called, to help you, the trader, understand a little bit more about what's out there in the NinjaTrader atmosphere. Today is no different, although it is slightly different because we have two for the price of one NinjaTrader vendors, NinjaTrader ecosystem vendors on the show today. Now, both of these guests have been here before. They've been here as the featured guests, but they also collaborate together. So we thought we'd try something different and bring them on both and talk about their individual services, but how they found a little bit of synergy, showing, explaining what they do with this collaboration. So it is really, I'm really looking forward to this. It's my pleasure to introduce back to the show both guests, Gavin Holmes of Trade Guider and Thiru Nagappan of Master the Markets. Welcome, gentlemen. It's great to see you guys.
Hey, Tom. It's really good to see you back on the show again.
Yeah, hi, everyone. And Tom, lovely to see you and Cags and everyone. And I'm broadcasting from the New Forest National Park, where we don't have problems with stops or anything. We have problems with pigs and donkeys. And there's a donkey as I'm broadcasting. There's a donkey right at the front door, which is hilarious.
That's
brilliant.
That's great. And Thiru, you're also coming in from the United Kingdom. Where exactly are you?
So we are in London. So we're basically just like 20 minutes away from central London. So quite into London. We don't get any problems with the donkeys and pigs, which Gavin talks about quite a lot.
And so just to get a sense of if you were to meet halfway for lunch today or dinner tonight, where would you, how long would it take you to get there?
It'd probably be Cobham, which is on the M25. So that would take me about an hour. That would take Thiru about an hour. So
wow.
So yeah, I'm on the south coast, right opposite the Isle of Wight. Thiru is up in pretty much central London.
Okay.
Where I'm going to be in a couple of weeks for the Traders show that I'm doing with Thiru. So yeah, no, it's we're a couple of hours apart basically, but it's not that far.
Well, that's what I get. I get lost in the dimensions. I don't, when I look at a map of England, I see London and then I see everything else. And I wonder how far it takes to get there. 2 hours, I'm barely out of New York if I want to go back to Chicago. So, really fun to look at the map and see that. But, begs the question, you guys have been collaborating I look at your work and it's complementary, right? It's very interesting that it's complementary. And how did you guys find each other? How did you meet? Give us a little bit of background on how you started your collaboration.
So Thiru, I'll start with it because it was quite an interesting one, because we do a lot of trade shows around the world. Actually, Trade Guider does, and we did a trade show up in London a few years ago now, several years ago, and the guy that taught me to trade, the late, God bless him, Tom Williams, who passed away, wrote a book. And the book was called Master the Markets, originally called The Undeclared Secrets That Drive the Stock Market, which I'm going to give everyone here today a copy of those books, because it changed my life for certain, and it's no charge. But I went to this exhibition and we had copies of the books, and I looked at this stand next to me or just opposite, and it said Master the Markets. I said, oh, someone's copied me. They're ripping us off. Right? Thiru's laughing. So I walked over. I said, excuse me, who's the boss? And it's him over there. I said, what's his name? Thiru Nagappan. So I walked over. I said, excuse me. I said, what's this master of the market stuff? What do you do? And that was the opening gambit. And he said, oh, no. And he didn't know about volume spread analysis. He didn't copy Tom's work at all. And it was completely true. He just said, and it was what we called it. I said, well, here's a book. And I gave him a copy of the book. And he said, what do you teach? I said, we teach volume spread analysis of the Wyckoff method. I said, what do you do? He said, well, we've got something that you should look at, right? Which I meet a lot of people. They say, this is good, this is good. But he said, look at this. This is based on price action. And it's based on statistics and this. And I said, well, I don't know. And then we became good friends. And at the end of the show, he showed me all of this stuff. And I said, do you know something? That's really good. And Tom Williams, if he was alive at the time, would have said that complements the volume and the spread and the analysis that we do, because it's based on a different algorithm, but they sit together beautifully and perfectly. And that's what you're going to see today. Thiru, is anything you want to add?
No, I think you've nicely summarized it really well. All I would say is every time we do a webinar together, Gavin and I, it just blows our mind how so complementary it is. And it really helps us identify the big runners. I know, Tom, in the last interview that we didn't get much time to go into the volume, and today we will, and see how they both really complement each other. It's really phenomenal. And we will show it and break it down step by step and show the audience, so they're really in for a new, really, really good treat.
Awesome. That's great. And like I said, I can't wait. Just how do we want to start? Do we want to go through the volume spread analysis basics? Gavin, you want to start, or Thiru, do you want to start with the statistics end of things?
I think I spoke to Gavin. I think I'll show the three stats, and the main thing where the volume is the magic really is in the selection for the big runners, and then I think Gavin can show how the whole volume comes together. What do you think, Gavin? Yeah.
Yeah. No, I think just one quick thing, because a lot of you will be new. You're listening to this on YouTube. We've got a load of new people into our database. I can appreciate that in a 45-minute stroke 60-minute period, it's very difficult to get everything. So towards the end, we'll give you the links to a website where you can get that you need. I totally agree with you, Thiru. I think you start with what you're doing with, because people want to know statistically. You know, I'm the head trader at Wyckoff Williams Investments Gibraltar Limited, which is in effect a fund. And I'm also the CEO of Trade Guider. We're going to show you today two simple processes that will enable you to have decision support. This is not a buy-sell signal system at all. I've worked with Jim Cagnina for over 24 years, right? I've worked with Tom for well over probably 10 years, but ultimately we're not giving you a black box that says red is sell, green is buy. Okay, you'll see what Thiru is about to show you will make total sense by the end of this presentation. Thiru, back over to you.
Right, great, awesome. I think we'll just dive deep in. Also, guys, you know, whoever is listening in, some of the concepts, especially, we'll go into much more detail like what Gavin said in 7 steps to CTP.com video series. And you guys can go deeper into that. We'll send you the link later on. We'll talk about that. But also another thing, please do watch also the previous interview that we did with Tom on the previous one. I think it's over here. It's called 3 Quantitative Stats. Because the reason why I'm saying that is this one over here. And it's just reached 10,000 views, I just saw. 3 critical stats for quantitative strategy construction. Do watch that. If some of the terminologies that I'm going to be using here that you're not familiar with, so that will give you a bit of a background too. So let me go dive deep in. Let me just start with one of them. I will choose the 6B chart, but the principles will all be the same, okay? And I'm going to use the daily chart over here as well, okay? So that's what I'm going to be doing at the moment. So let's take a look at this one here. So on the 6B chart over here, Now, the first thing what I'm going to be doing, just to give you a rough general overview, so you can see all these arrows over here, right? So those are the things that has been programmed in by our smart money framework indicator, okay? So all it has done, which is this work started at the 1960s, which is similar time with Wyckoff methodology as well. In fact, my mentor's mentor actually references Wyckoff quite a lot. And that is why you will start to see by the end of this presentation why both the methodologies of Master the Markets and Trade Guider is so complementary. So this smart money indicator framework, what it does is they've quantified what a top and a bottom is, right? So they've formulated the formulas and all of that. And that's what you got over here. So you can see the arrow, the top, the orange arrow means a top, right? Confirmed. And when does the confirmation happen? It happens on the dot over here. Can you see the orange dot? So when that bar fulfills the formula, then the arrow and the dot appears at the same time. And then the same for the bottom, right? So the bottom, the blue arrow and the blue dot appears at the same time. So this bar is the one that fulfilled the formulas, and therefore then the bottom got confirmed there. So that is in a nutshell what it does. Now, from quantifying the tops and bottoms, and why did they quantify the tops and bottoms? Out of one simple fact, the nature of the markets, everybody listening in will all agree, whether you've traded or not traded even, you will all agree that no chart in life, any instrument, put any instrument, any chart, nothing will move in a straight line. We all agree, right? I mean, every trader will agree. Therefore, if it doesn't move in a straight line, it moves in cycles. Now, if it moves in cycles, it will create a top and a bottom, inevitably. And that's what they did. They went to quantify what a top and bottom is. Now, from there, you can get three important stats, which is what I went through in the previous interview that we did with Tom, which is the first thing what we call the open profit or open equity, right? Basically, open equity is defined as how much move is left upon point of entry. Now, that is very critical to know. If I can know on a probability statistical number, every time I enter a trade, how much move is left, that will help me with my target setting. Because most of the time, the issue that most traders have is that they hold on to a trade too long, and then it comes back against them, and then they lose back the profits, right? Or they enter it too early, and especially when it goes against them, they start to get panicky, which will show you some live examples later on, which are running live as well. And then they will exit it only to see it later shooting up towards more and more. So that is why the open equity stats is very, very important. And that is what they figured out. So how do you do that? So you get a consistent point of entry, you lock it in, which is what we discussed in our previous interview, Tom, and I highly encourage everyone to watch that. And also discuss further in 7 steps to CTP as well. So once you lock in your point of entry, how they locked in is when the bottom gets confirmed. So their point of entry is always on the close of the confirmation bar, the bar with the dot, right? Whether it's the blue dot or the orange dot. That's how they locked in the point of entry. And then to measure the open equity, then they will look at the maximum point reached. The maximum point reached in a bottom to top move, once the bottom is confirmed, is all the way to the next orange arrow. So then they will calculate from this point to this point, they measure that distance, and that is what is known as the open equity. Now, just to give you some stats, so how we do that on the NinjaTrader platform, we programmed that all that in. So if you go on to right click, if you go on to indicators, and then over here, when you scroll down to the smart money one, we got all the trade guide ones. That's what Gavin will be going through in a minute. And then under here, stats, we can choose OE. And then after that, you can choose whether it's the raw number. I mean, we just call it loosely PIP, but it means points for indexes and the relevant units for other instruments. And then after that, then we toggle around with the settings, and once that's done, we apply and we say, okay, so I've already preloaded it, so that's much more easier for us to look at. So the first stats that we look at is the open equity stats. I've run that for since 2023 all the way to now to 2024. So all this is doing is it's seeing whether it's a bottom to top move or a top to bottom. Whenever the blue dot or the orange dot comes, it checks the point of entry, locks it in, goes to the maximum point, and then it starts to measure. So, and then it's list every single one here, right? How much each one did. So I did this on the 6B over here, which is GBP USD. And you can see that the first move, you see it already just done zero, that means it automatically turned against you. And the second one, it did 185 pips. I mean, most of you are familiar with pips and currencies, you will understand that. And then this one did 143 and so on. So it measures all of that individually. Just so imagine like it's one individual runner, right? So it's measuring all of that, each individual runner, how much he is running from point A to point B. Then the key thing then it then does, it collects all of that data into the here. So then what it's showing over here is that we got a total of 28 guys, 28 tops and bottoms, 28 blue dots and orange dots, or 28 runners, if you want to think like that. And out of the 28 runners, 21 of them get to 25 pips, which is 75% of them. 21 divided by 28, 75%. And so on and so forth, 15 and then 12 and all that. Now, for the traders listening in, now this is just stats, right? This is not the strategy itself. Now, how do we construct the strategy? And this is what I just slightly wanted to touch on in this interview over here, is that the first thing what we do, traders, is in a strategy, you've got three main points, right? One is the entry, where you're going to enter. Next is the stop loss. And the last one is the target. Now, the stop loss can be segregated into two parts, your initial stop loss, and then the final one is the trailing stop loss. Okay, and your target as well can be subdivided into pre-trade target. That means before you enter the trade where your target is going to be. And if any adverse conditions happen while you're in the trade, how are you going to exit, or are you going to change your target? So that's intra-trade target rule. So this, I would say, is the three main overview components and then the sub-components in strategy construction. So there's really quite a lot to think about before you start to even press the trigger, which a lot of traders don't really understand. I mean, some clients, I mean, between me and Gavin, I mean, we've got 10, 15 years of experience, and Gavin will say that even when he talks to banks and institutions, I mean, some of them don't have even the principal understandings, and it really blows your mind. You thought they would understand all of this. But that's the thing on strategy construction. So now, just to touch on the target part, so before you enter the trade, I would say this target numbers and all that is very important. And one thing that we would use for one of the strategy construction is the 20% numbers. So you see, this 20% number, which says that 5 out of that 28 gets to 200 pips. Okay, so that's how I would construct one of my strategies, and I will call it a 20% OE strategy, open equity strategy. I'm looking to capture the bigger runners, right, to get to 200 pips. That's how I lock in my target. So anytime I get a signal here, so let me just bring up the 6P again. Now, anytime, let's say I get a blue dot, now confirming here, I can start to consider to see, do I want to choose that? Is that going to be my big runner or not? Now, here's the next point, what I want to tell all the traders listening in, right? And I'm going to watch the recordings and look at 7 steps to CTP as well. In every strategy, traders, whether it's the most complicated or the most simplest, it all comes down to two stats in the end. One is called the total gross profit, and the other is called the total gross loss. As long as your total gross profit overrides your total gross loss, you get a net profitable strategy, which is what everybody wants towards consistent performance. But the thing is, how do you do it again and again so that you create sustainable, scalable, reproducible strategies. So in terms of this, if you just simply took a look at the numbers, right, on the 6P, if I were to take every dot that came in, and that's what Gavin's point was, this is not buy and sell indicators where every time a dot comes in and then you just jump in and along with Gavin's signals as well. That's not the point. The point here is that, so let me just bring up the OE stats again. The point here is that you don't choose all the 28 dots. Your thing where you need to slow your mind and start to think is that, okay, 5 of them only get to 200. That means, first of all, it stops me from overtrading. And it logically makes sense because not all the runners are going to be the biggest marathon runners, right? I mean, by percentage-wise, they're very few. So the next question then comes that if I choose all of them, then of course, only 5 of them will get there, but it's going to be hard for me to fight my total gross loss and finally get to a net profitable strategy. So then the key thing is to make my strategy net profitable is selection. How do I select from the 28? I don't want to select all the dots, right? Every signal that comes in, I don't want to be trading all of them. How do I only select the bigger runners? How do I select? Right? So one of the things that we saw that really helps with the selection is the volume. And that really adds a large part to the missing part of the puzzle. So you see, traders, so simply, if I were to, using certain filters, and that's where you can use all the different tools that you learn, the Fibonacci tool, you know, you can use ATR, you can use so many different tools, trend lines, whatever it is. But your key thing is now is how do you select those 5 to get to that 200? And can you retain, let's say you can't get exactly all that 5, you can't get 5 out of 5, but even if you reduce this to 10, even if you selected 10 of them and 5 of them, you still retained it, out of the 10 that you're trading, still the 5 big runners are retained in there, immediately you will start to see, it doesn't take much big rocket science now, your total gross profit will be retained, naturally reduces, your net profit shoots up the roof. So this is what we want to do in strategy construction. And we got a framework to do that, which is what you're seeing at the moment, developed by the quant traders in the 1960s. So that is on the OE. Quickly brushing through the other stats which we can get, which is the MAE, which is what I spoke about in the last interview. So not only how does it, not only about the target, but the most important thing, traders, is how does it get to your target? Because not all of them, Tom and Gavin, as you all can appreciate, not all of them will go in a straight line, right, towards the target, as you can see from the charts itself. You can see even this one here, when it got to its target here, look, it consolidated immediately. Then after that, it continued on, right? So the next question is, how does it get to your target? How much does it, more specifically, how much does it move against you before it gets to your target? So the MAE number here, which is what we are showing, let me bring the MAE table. So the MAE table over here, what it shows you is that where do you statistically and strategically place your stop loss so that you don't get stopped out by the institutions and the smart money before it carries on towards your target. If you don't want to get stopped out 100% of the time, that's your number there, 200 pips, right? 96% of the time, if you don't want to get stopped out, that's 175. So immediately in my strategy construction, target is 200 pips. Initial stop loss, I'll put it at 200 pips away. But here's the word of caution, right? That most traders will say, oh, that's a one-to-one reward to risk ratio strategy, Thiru, you know, how can it still fight the losses? I just want you all to understand that 200 is chosen for it to give it volatility, room to move, to dance around, which is what I say in the last interview as well, which is give it room to dance to get to its target, not necessarily meaning that all the trades you are going to take is going to hit the initial stop loss. So eventually your actual, which is what you need to be focusing on, your actual reward to risk ratio may become that your average loss may only be about 100 pips, so that your target is still 200. It will come up to be a 2-to-1 reward to risk ratio. Actual is what you need to be focusing on, traders. The initial stop loss is to give it room for the dance to happen. All right. So that's the thing that the MAE does. And finally, what we would use for trailing stop loss so that we don't give away too much of the profits, we use time. So we use the time to example over here, and we can find out that for all the runners that got to 200 pips, which is the 5 of them, the 200 pips, I analyze them deeper and I find out that if I give them 10 days, all of them will get there, right? 3 days, 60% of them get there. So what will I do? After about 4 days, between 3 to 5, after about 4 days, I will start to trail my stop loss tight so that my losses can become lesser, but my profitable runners can still get to my target, because after 5 days, after 4 to 5 days, there's a higher chance that they will become a loser. Okay, so this is how we are using the stats. But the key thing here is, as I said, is in the open equity table is how do you select those 5 to get to the 200? We found a big piece to that puzzle is in volume. And I think at this point, I think that'd be good if Gavin can come in and then fill in the viewers on the volume puzzle.
Yeah, Thiru, just a couple of things. First of all, I know we in England talk about pips, but in the futures market, we talk ticks because I trade ticks. So don't get confused with that, guys. If you're in the US and Canada and you're trading futures and you say, what's a pip? It's a tick. Okay, so incrementally, we know that the British pound 6B ticks at so it's $6.25 a tick. Now, don't confuse it with a pip because it's completely different. And I can. Some people are going to go, "What are you talking about, pip?" And I just want to clarify that straight away. So, we're talking about ticks of price, movement of price. Okay, let's just get that very clear. When we come to the statistics, this is one of the reasons we work with Thiru very closely, and that is because a lot of people want to quantify what their trades are likely to do, where they're likely to go. Now, my trading style is not necessarily exactly all of it, but I've started to add in Thiru's work into my trading and to the trading in Wyckoff Williams. When we look at volume, now, I think, Thiru, if we start off, that's the gold chart you've got up, right? Let me just have a
No,
quick
this
look.
is 6B. I've got a GP USD.
Right, you've got the pound. Put gold up for me because that's a trade we're still in.
Yeah, let me put that
if
up.
you could put up a if you could put up a 4-hour chart of gold to start with.
4 hour, yeah, let's do that.
Yeah, and we can use candlesticks. It doesn't particularly matter. Okay, now we're using NinjaTrader.
Yeah.
You can put an hourly up. It doesn't make any difference. It's going to show the same thing. I mean, you haven't got the data there, but put the 1 hour up. That's fine.
Yeah.
Yeah. Okay. Now I did a YouTube video on this, and I talked about you see there. Now this has got candlesticks. Now you can change that to open, high, low, close, Thiru, by going to the little candlestick button and change it to HLC. Yeah, because that's what I use. I don't use candlesticks. I go HLC and just type in HLC. There you go. Right. Okay, so there's 2 things I want to teach you today on this NinjaTrader type. So why do I use NinjaTrader? Okay, that's a great question that came in. The reason was several. Number one, I think NinjaTrader 8 is an exceptional platform. It's very easy for us to set up in our Smart Center Pro software. Can you put the VSA indicators on there, or are they already on there? Right, they are there.
They're already, yeah.
They are. So the last indicator and the bottom indicator, which I did on YouTube, I'm going to start to explain what's going on. So the 2 things that we must understand as traders and investors is that when strength appears, as in buying from the smart money, and my book, which I'm going to give you, is called Trading in the Shadow of the Smart Money, written in 2011. It talks about buying at lower prices. Makes complete sense, right? But most traders don't know that. They see a falling price with high volume and think everyone's panic selling. They're not. If the chart shows it. let me be very clear on this, because I did a demo to a big bank this morning. They won't be named, but they're basically, one of the fund managers said to me, "What are you talking about? You're talking about buying as the market's falling." I said, "Yeah. If the indicator in VSA and then confirmed with the SMI indicators, it tells me. I don't just buy on falling prices. I don't catch the falling knife. Why would you? You wait." Now, if you look at the indicator to the left here where the very high volume is, we're going to start to the left. That's it, right? There's 2 volume bars there. Let's start with just basic principles, right? The volume is massive. What is that? That's the elephant in the room. When I've worked with Tom Schneider and I've worked with Jim Cagnina for many, many years. And, you know, when we're looking at volume spread analysis, it's based on the Wyckoff method. Okay, Richard DeMille Wyckoff. You can go to Google and you can Google Wyckoff, but we've got our website. It's richardwyckoff.org, and you can find all the history that's there. But Wyckoff told us the same thing. The big money move when the price is attractive to them, and it's not as it goes up. They don't want to buy high. They want to buy at an attractive price, which is why you've got the SMI indicator comes in, and we've got this massive volume bar, and I use something called Smart Center Pro, which we haven't got time to show you today, but we're going to do a special webinar for everyone here where we're going to trade it live, show you it all, so you can see it, because we're limited for time. So we then see, oh, there it is. Oh, it's got it up there. Okay, yeah. Well done, Thiru. I didn't know. Okay. So this is tracking multiple timeframes, okay? And it's looking for changes in behavior in these multiple timeframes, right? Now, you've got the ES up there, which we can come to, but we've got gold. And what we've seen here in gold, and we'll go to crude oil if you've got it, but we'll come to that because that's one we did a big event on this morning. But if we now look at some simple logic, right? You can close that down now, Thiru, because we haven't got time to explain it, and I'm conscious of time. The market at the bottom turns on massive volume, closing in the middle, and then a big blue bar, right, which is called, yeah, the big blue one, that's it, right after it, right? Now, as soon as I see that setup, I want to see some sort of test in the future. The SMI indicator confirmed it in NinjaTrader. The SMI indicator in the 5-minute, the 3-minute, and the 1-minute confirmed it. But look at the green indicator, Thiru, at the right edge. Well, it's about 12 bars back. And the market pulls back, and everything in our system is green in the VSA system. Go to the right edge, almost to where the green indicator is. It's the low volume bar. Keep going to the right. There's a green indicator there. This is where I took the trade. Keep going.
Oh, this one here. Right.
Oh, yeah. Now, I'm just going to explain this setup so everyone understands it. And then we can go back to Tom for any questions. First and foremost, in the background. Why is the background important? Well, if you go for a bank loan, the banker isn't interested in what you're going to do with the money. He's interested in what's your background. Have you got a good credit history? Have you, been with a bank for more than 10 years? All of this stuff. The background is the key here. Someone's bought a group, a bank. I don't care, and I don't ask because I don't need to. I can see a retracement. Thiru quite correctly says markets don't go one direction, but they move on volume. And we've seen a pullback here over that period. But look at the volume on that green indicator. It's hardly anything there because they've already bought. So as the market pulls back, which is the retail traders who don't know what's going on, the buyers have said, we're in control. And they're in control now. And it's all on the YouTube video that I did yesterday. It's all here. That is a test in a rising market. That is a test. And it was on multiple timeframes. There it is. The SMI indicator confirmed it. This is why we're doing this. And is it built into NinjaTrader? Yes, only recently, which is why we're doing this together. And is this a buy-sell signal system? It's not. It's a strategy system. And it comes with what I've written, 4 strategy documents that we give you when you become a customer. So you don't just, you know, and we can talk to Tom about how you can get NinjaTrader. And, you know, I know that they do end of day data with Kinetic. A lot of traders trade end of day. I've got the end of day data with Kinetic, and we can talk about how you get that, because there is some confusion there, and we can clear that up today. But what we see in the system that's plugged into NinjaTrader here, which is 2, the VSA Smart Center technology and the SMI technology with statistics. Now, what I've found in this industry is there's a lot of people teaching different strategies, and it can be very confusing. You know, this is right, that's that. The reason we work with NinjaTrader is they're very, very good at vetting and making sure that the people they work with give good information. Okay, and that's why we're doing this. The second thing is the platform is very robust. And the third thing, and most important part, I think it's like a pilot getting into an aircraft and looking at the dashboard. And is this dashboard really clean and easy to read and simple to use? Yes, but only if you know how to fly it. That's why they have flying instructors. Thiru and I are your instructors. We will help you, right, Thiru? We've done it with many.
Definitely.
And
So-
we change your view from a holistic approach. And I'm talking about, and Thiru and I are big on this, not just about chart reading, not just about looking at green and red, not just about saying, oh, I'll just press the button because I feel lucky today. Well, yeah, that's how Jim Cagnina trades. He's brilliant at this, but he taught me. He just, hey, Gavin, just go long. I've made money at it. But no, seriously, all of us, Tom, Jim, Thiru, myself, know one thing. There is a belief system underlying all of this where we have a plan. We don't trade blind. We don't get in the aircraft and go, I'll tell you what, switch all the cockpits, switch everything off. We'll just go down the runway and hope we get up. Doesn't work.
So Gavin, I've got to jump in because you're talking about a couple things near and dear to my heart, which is, of course, trading. But of course, maybe you don't know this, I did flight instruction. I have many hours under my belt. And the one thing that you learn while you're going through flight school, as you should while you're learning to trade, is exactly what you and Thiru are talking about, which is understanding why the markets behave the way they do. You could be taught to push a button, you see a red or green or a triangle here, a triangle there. And if you don't understand what's happening, it's not going to be a good thing. Just like when I went through flight school, they just didn't put us in the cockpit and say, here's the flight checklist, and then push the button. We had to take ground instruction, which explained all the different physics and regulations and procedures behind the checklist, behind the flight. And this is actually, you know, two somewhat similar, but different results if things go wrong, right? In a plane, it could be catastrophic, but financially, if you do it on a chart as well, could be catastrophic as well. So in a different way. So this is why you want to understand the, you know, what's happening in terms of volume. Why are the, you know, making that probability based on statistics that you can see plain as day in your face, you know, that can inform your decisions for trading a lot better than just seeing a triangle on a screen.
Tom, 100%. And it's interesting because Thiru and I work together. We work very well together. In fact, you know, I was up in London for his baby's christening, and it was great. I loved every minute of it. But it's interesting, we come from different backgrounds. So he comes from a medical background in the heart profession, right, Thiru? So it was
cardiovascular, yeah.
Cardiovascular. I come from law enforcement, as you know, Tom. But we're both traders and we're both passionate about what we teach. But the most important thing, we have the same belief system. And the books that I had read previously years ago, when I first met Thiru, I said, have you read this book? Have you read this book? And we have. So there is a common connection there. And I was very privileged to meet Jim Cagnina's son and his girlfriend. They came over to the forest here. They couldn't believe what they were seeing. You know, why have we got donkeys running around? But again, what a great credit to the Cagnina family. But I remembered that when I first met Cags, you don't know how things are going to move forward. And then I got involved in trading, and I just thought, I thought it was a hobby for me to start with, but then I ended up, it was a life-changing moment. Now, the one thing I'd like to show you very quickly here is, if you can, is put up the NASDAQ on the 3-minute chart, because we've got a trade running here. And I don't know if I can't take the screen, but I just put the NASDAQ up.
I don't know the NASDAQ. I've got the E-mini. Okay, I can put
The
it on
E-mini's fine. Yeah, it does the same thing. It's pretty close. Yeah,
okay,
but you can
you want me to put the E-mini?
Take the candlesticks off and put just the high-low close. And I'm going to show you all something here.
Right. Let me just put that one.
Okay, because we just had a test in a rising market. Okay.
There we go.
Right. Okay.
And you want me to go to 4 hour, right?
You put
60
up
minute.
Put up 60 minute. It's the same. It doesn't really make a lot of difference. The whole thing's the same. Right. Now look here. Right. At the weakness which caused the market to fall, because everyone's saying, oh, we're in a bull market, right? Put in the high-low close. Now look at the top, the very top, right? The narrow spread at the top. Yeah, that's the one, right at the very top. Yeah, go there. So you see this market moving up, and then you get a narrow spread, all right? And then you get what we call a trap up move. Okay, and I've seen multiple ones of these today. Now, we observe that the volume isn't massive there, but there's a very key indicator that I want to describe to you now. There's 3, which set up an email, which I got. Now, put up the indicator to the right, the red one on the widespread massive volume bar, right? That's the one. Yeah, that's it.
This one? Yeah.
Yeah. You can click on it, and it should, you stop. Yeah, you don't, just click on the indicator. It'll come up with the dialog box. Once you have to take your drawing tools off.
Oh, there you go. Is that the one?
That's exactly it.
Trap up move, yeah.
Okay, I'll explain this to you all. Very, very important what I'm about to tell you. If we look at the spread of that bar, now, Thiru, you can close it down because I'm going to explain it. Okay. Put a line on the bottom of that bar and project it out.
This bottom, yeah?
Yeah, the bottom of the bar. Project it out. Keep going. Go right to the right edge. Because there's 2 red indicators that appeared in the same area. Keep going. Go all the way to the right.
All the way to the right. Okay.
Where the 2 red indicators are. See, no. See where the 2 red indicators? Yes. They're level with the bottom of that bar. This is really important. This is going to give you an opportunity to identify a high probability trade setup. There's always risk. But look at those 2 indicators and look at the reaction in that area. That's the bank manager looking at the background and saying, there's something going on in the background here. We mark it up and reverse it. It's called a reversal bar into that area. And the SMI indicators that I was using on the small time frame gave that as a short. That's not in hindsight. That happened. I did it on YouTube. Those that you were in the live YouTube stream that I did will have seen this. It's set up a long time ago, but it was always there. So, in summary, and then I'll hand back to Tom for any questions, weakness appears on massive volume or high volume up moves, but is then confirmed in the future on low volume up moves into that area. We call that no demand after weakness. That is a reversal bar, the ones you've seen that caused the market to fall. They had to be there in foresight, had to be. I'm not doing this in hindsight. That was there, and I did it on YouTube, and all my customers that in my mentorship courses, they saw it. This works. And the reason I say it works if you apply it. It's a bit like Tom saying about being a pilot there. I can actually relate to that. I'm not a pilot, but I'm teaching a pilot. And when I'm doing a one-to-one mentorship with him, and he said, right, I need to do this, I need to do that. I said, hold on, you don't need to do anything. But as a pilot, you definitely, I'm sure Tom would agree with this, before you get in your aircraft, you walk around it and check it, right? You don't just jump in. You want to see if there's a dent in it. Is that right, Tom?
Oh, for sure. We did. There's a whole thing about walking around and especially in small planes, right? You can do this. Walk around and feel the edge of the plane. Make sure, like you said, there are no dents or cracks, and you do a physical, tactile check of the airplane.
Yeah, yeah. And then when you get into the aircraft, you don't just suddenly turn on the engine, switch it on and go, right, let's go. Hey. No. Well, I would, but Thiru would. But no, that's not what you do.
Right, right.
That's what traders tend to do. They just get in and go, hey, let's go. No, you have a checklist. We've got a check. Thiru and I have written a checklist. We've got the checklist, right? So what you're doing, and I said this to the pilot. I said, "Where's your trading plan?" He said, "What are you talking about?" I said, "Well, show me your ship. Where's your trading plan?" I don't have a trading plan. I said, "You're a pilot. You're telling me all these rules and regulations, and you don't even have a plan to trade against some of the smartest people in the world."
Right. And you know, Gavin, it's funny you say that. We didn't even talk about a plan before getting in the aircraft. If you're going to another airport, you do file a flight plan, right? To say, I intend to go to this airport and this is my path. And you know, so the other airport has that plan, and it's a reference in case something, you know, goes wrong, God forbid. But also, if you're going up just to practice in the area, you have a plan to do that. You say, I'm going to do this is what I'm going to practice. I'm going to practice these type of turns or these type of touch and goes. I'm going to do this for this many times, and then I'm going to land on the, you know, at the same airport. And that's part of the plan too. Whatever you're doing, you leave or you stay, you've got to plan it every time you get in the cockpit.
I agree. Thiru, going back to you, what we're going to do, you and I are going to do a special live event, right? Where we're going to go into because we're stuck for time, obviously. We want to keep it at 45 minutes to 60 minutes here. We're going to do a live event, and to get into that event, you can register. But the most important part, and maybe Thiru, you can show this, if you can go to tradeguider.com/ninja, NINJA. And we're going to be using Smart Center Pro for NinjaTrader. And
that's the one, isn't it?
Yeah. And so what I'm giving you all NinjaTrader customers, all our customers, all Thiru's customers as well, is a copy of my book, which it retails on Amazon, I think, for $99. It's a PDF, so you can download it. And then also the most important part of this is, if you scroll up, it's the Master the Markets book, which changed my life. All right, it's not in print anymore, I don't think, but we've got the original copy. And we've now uploaded it to our site. For those of you, you can see there that we've put them up. This is our recommended trading platform, NinjaTrader. There's many reasons we're going to be using it in our mentorship course. Now, Thiru, you and I are doing a specific you and I are doing a specific course together, using both our systems over a 5-day period. Do you want to just touch quickly on that, because we're going to be featuring NinjaTrader in that?
Yeah, I mean, definitely. And also just one quick one, what I also wanted to show them just before I go into that and summarize and bring everything together. Also, 7 steps to CTP.com, I think, is where you can find out more about the all the tree stats and all that. That's the 7 steps to CTP.com. Some of you are asking that. Coming back to here, and what we're going to go through in the mentorship in detail is, how do you correlate the timeframes and put the plan together? The plan is, as I say, in a strategy rule sheet, you need your entry, your stop loss, and your target rules in your sub sections. Now, you see over here, traders, on the S&P, this is just on the point that Gavin was saying, what are we going to go through in detail? You see, just on a simple concept that nothing can go in a straight line. Look at where the bottom got confirmed on the S&P over here, right? On this blue dot. After that, I mean, don't get confused with these orange arrows and this one. I know they look similar, but we need to look for the dot after that. So, because those are from the trade guider system over here as well. So coming back, so from this blue dot over here, this is the bottom confirmation here. This is what we call bottom to top. Look at this, right? Look at the distance it has gone all the way until here. The top hasn't been confirmed. This is not the SMI top. This is from the trade guide, a selling signal, which is, look at that, right? Which is really good. But from the first basis of concept, these are the things we're going to go through in detail in the webinar that we're going to go to, me and Gavin are going to do together. But just on a simple concept, nothing can keep going in a straight line forever. It's got to turn at some point. And you can see the bottom got confirmed here. As it travels more and more further away from its bottom, open equity is diminishing on the bottom to top move. The probability for a top increases. And here is the best part, traders. And hopefully you all get this. And then that's where everything will fall in place together. This is on the daily time frame. And if you want to capture the bigger moves at the start of this move over here, imagine you can't see any of that. That's when you should start thinking, hey, hang on a minute, nothing can go in a straight line. The top is coming soon. Open equity is diminishing. Let me go on to the smaller time frames and marry up what Gavin and Thiru have spoken about today. Let's say over here on the 60-minute over here, and what Gavin was just saying on the setup. Look at that. Towards, you wouldn't be able to see all of this, but towards here, this point here, and looking at the volume and the price, you would have started to see professional money is coming in, and then you make an informed choice, right? Selection. Remember, it comes down to what I was saying just now. To capture the 5 guys who are going to run the bigger move of 200 pips or 200 points, whatever it is on whichever instrument. And then you make that informed decision when the dot comes in along with the volume over here. And then you hold on to that trade from that 60-minute. So you're expecting that 60-minute. Now, here's the punchline. That you're expecting a 60-minute top to hold on to become a 4-hour top and then to become a daily top,
Exactly.
which is all it started from here, right? Now, that is the power of putting these methodologies together, not just on the guesswork, not on just like gambling, you feel lucky, you want to go on a trade. No, but so systematic, so methodological, all backed by stats as well, on a solid framework is what we are going to be teaching in the webinar together with Gavin. But I would say the first thing would be, 7 steps to CTP, and also definitely go and read the book that Gavin was talking about on Master the Markets and Trading the Shadow. Once you get into our email list, then we'll tell you more about the next webinar we're going to do together. Really a game changer. People have found really amazing value when you put both of these methodologies together, traders. Over to you, Tom.
And Tom, just before we go, I just want to announce that I'll be trading live at the London Traders Expo on the 8th of March at the Novotel Hammersmith. A lot of you are already coming. If you want to get a ticket for that, it's free. I've got complimentary tickets. It's usually £100. Just complete the, if you want to get a copy of my book, you'll go into our database. I will then send you a copy of the tickets. I know a number of you are coming that have never met me, that I've mentored. I'm looking forward to meeting you. And or during the webinar that Thiru and I will be doing in the next week, we'll show you the NinjaTrader platform in a much more advanced way, i.e., Smart Center Pro, email alerts, trading alerts, everything you've seen today in a very short period of time. I know for all of you, it's like drinking out of a fire hydrant, really. You're getting a lot of information, but I can assure you, if you read Master the Markets, that's the starting point. And then meet Thiru and I either online, or virtually, and know that we're working very closely with NinjaTrader. And I know that we're meeting with them afterwards because they've got a new format, which we're looking forward to hearing about. We are fully behind Ninja as a company. We like everything. Tom, congratulations to you and Jim, what you do. I know Thiru's been impressed, and all our customers that I've spoken to have been very, very happy with the support and everything. Their support is first class. The reason I trade futures, and the reason I like the futures markets in general, is exactly when you're entering a market, you're not getting these price spreads that a lot of these forex companies do. They change the spread. I'm not saying there's anything wrong with it, because that's what you sign up for. But I want you to pay attention to a couple of stocks before we go. Okay, and I'm going to talk about this a lot more in the event that Thiru and I are going to announce. We're going to talk about Walmart. We're going to talk about Target. Okay, with these, just make a note of these because they're in my scanners right now. we're going to talk about NVIDIA. Okay, we're not going to show them now. We don't have time. And we're going to talk very, very much, okay, about Tesla and what's going to happen. Because I can see, well, I'm not going to get you to put it up. We haven't got time. But Tesla is a very interesting stock that's accumulated at the moment, but not ready to go. That's the website. It's very easy to get the book. You go to tradeguider.com/ninja. That will put you in the database. We will then email you a link to the free webinar that we're going to be doing early part of next week. It's probably going to be on a Tuesday because that's where we seem to do well. So on behalf of Thiru and I, Thiru, if there's nothing else you want to say, I'll hand over to Tom, and if there are any questions, we'll take them.
Well, again, thanks, Gavin, for the kind words, and Thiru, for your time and showing us what you do together. I think that's remarkable, that you guys found each other and were able to, kind of fuse everything together in a nice way and present it, I think, in a very understandable way, but so much more to explore. You gave them your contact details. So I encourage the viewers to go visit both sites. And, certainly not hurting for information, but that's the thing about Thiru and Gavin. They're very generous, very giving, because they want to share the information they found that really helps them with trading the market. So again, so much here, so much to be thankful for, and for you two to come on the show. But we are going to wrap it up. I want to remind everybody that we will finish the day with bars closing. Jim Cagnina will wrap up the day. And want to thank everybody for their time. In the meantime, have a great trading afternoon.